Perhaps you're totally new to the term imbalance zone in the market, and perhaps you don't even know how to find or mark on your chart. So that's exactly what I'm going to share with you today, how to find those zones of imbalance and how you're actually going to mark them out. Now we're on the EURUSD pair currently on a weekly time frame. But listen, whatever time frame you do this on, it'll be the exact same process. Now the actual imbalance zone, let's just do a quick sketch of it. When we see the market pushing higher and we see the drop and we see continuation, this is basically where we are going to see that break of structure. Okay. If you're not sure about market structure, there's a full playlist. You'll find that on the channel homepage. Go through every video on market structure because it's going to help you to understand how we look at market structure and how you can apply the imbalance with market structure. So in this move here, what we're going to find is normally this is going to be an explosive move from this higher swing low in the market to break this structure. Now, very often you're going to find an area of imbalance is right at the breakout point, and we can find an area of imbalance can be formed there where we can see the market pull back down and continue off. Now, why does the imbalance form at this breakout? Because the banks, institutions are going to pump those orders in to break that high. And they also know this is where we're going to have support and resistance traders trading here. And when the market comes back, that's the area where they know they can manipulate those traders out of their positions at this area of imbalance. And that's where you tend to find a sweep into that imbalance where you can look for those trades. So the imbalance can form at that breakout point. The imbalance can also form from the move where we see the origin, okay, is forming an area of demand. Okay, in this situation, we can create an area of imbalance. And the imbalance can also be created after the breakout. Now, when we see an imbalance being created after the breakout up here somewhere, unless we have a really strong trend in play where we can see the market pulling back, continue off very, very quickly, they are not the best zones for you to trade. The reason being, we want to see that pull back, okay, to a good area for continuation. Now, when we're looking for trades, understanding the pull back into these areas of premium discount, that is how we look for that. And that's going to be in a different playlist series. So the imbalance zone itself, the way we create an imbalance zone, we just draw a couple of potential candles. So we can see the move away, okay, like this, a big strong move away. And obviously, I'm not going to draw here the wicks on the chart, but what we'd actually potentially see is a leftover area here between the high to low of that candle, which would create that area of imbalance. And that's exactly where you look for the next candles to pull back into that imbalance zone, okay, and you're looking for a potential trade out of that imbalance. That's a quick sketch just to show you the actual process of the imbalance zone itself. The imbalance will be between the high of this candle here and the low of this candle. That is how the imbalance is going to be formed. Once you have the close of this candle, it will form your imbalance left over. Inside this imbalance, you're going to have orders left at the high, the low, and the bottom of that end zone, where you can find the market come back to hold at the 50% normally for continuation back to that direction. Now, if you're in a bearish market, okay, again, you'll be looking at just the opposite thing with that imbalance zone. Now, we'll look at some examples on the chart as well in a second, so you can see how all of this is going to look. Just remove all that. So if you want to go through that sketch again, obviously you can just rewind this video quickly. So we're looking at this market, zoom out. We can identify that we've been in a bearish market since we saw the shift went bullish. We failed to run this high. We then made a market structure shift of this low here to downside. Okay. Once you've seen the break of this low, that is then putting us into a bearish bias. But let's look at this area where we see that reversal, looking for those imbalances. Okay, we'll start here. We can identify we have this break to this upside. What did I just go through and say where we can find those imbalances? We can find the imbalance, okay, from the low of the move where we see the breakout and above that breakout, okay? At this point, we can identify the first area of the origin move comes from this area of imbalance. That's where we see the imbalance being drawn from the high of that candle to the low of the next candle. Let's go closer in so you can see exactly where I've drawn it, from the high of this candle and the low of this wick of this candle. That's where we draw the imbalance. We have in here this bullish candlestick. This leftover area of this bullish candlestick has not been tested into. That's where we have buy orders left over in the market. So that's that first area of imbalance. The next imbalance you can draw is the breakout imbalance, which would be this zone here. That we've just come to this example. I haven't cherry picked this. We've just come to anything to show you how this works. So we can look for potential bounce off these imbalances. Again, like I did say, we can see them bounce off the high, the 50%, the low. This video is really just to teach you how to find those zones and how you look to actually draw them out on your charts as well. So here we can identify this imbalance actually holds until it's closed through on this bearish candle. Now in later videos in this playlist, we'll go through how you can use the imbalances for directional bias, how you can use the imbalances when you're looking for the break of structure, and how you'll be able to look for what I call the pre-imbalance zone. So keep watching the rest of these videos in this series to understand how you can use imbalances. Now, if you're enjoying what you've seen on this video so far with the imbalances and how you find and draw them, then drop me a comment to let me know that you want to see more videos on imbalances to help you to really understand how to trade them. So right here, once we see this shift through, and when we see a reversal of an imbalance, which we're seeing here, very likely that's going to create what we class as a new imbalance. And that's what we have here. We have this new imbalance formed. Okay, so you can see this imbalance was formed on the break of this imbalance. We then also closed through this imbalance. We held and we closed through with this candle. What does that create? That creates a new imbalance. Remember, we can draw the imbalance zone from the low of this candle on a bearish move, what we do here, and the high of the next candle. So the bearish candle here and here, we have leftover orders. Now, either these orders can be pushed back into and they will be triggered to push the market lower, or they can be pushed through. So we can see here we pushed through. Now, if you're not sure about the idea of imbalances, look at it as a solid bearish candle, bullish candle. That's where you're going to find those imbalances. So we can see that we closed through here. As we do that, we create this new imbalance. We have a bullish imbalance to the upside. Again here, look, we push through this bearish imbalance and we create this small bullish imbalance. Now on this imbalance, we don't come back into it. This one, we pull back into the imbalance on the lower time frame. That's how we can look for those entries. Again, later videos in this playlist will go through all this and we push higher. So this imbalance is then actually closed through with this big bearish candle. What does that create for us? We can draw a new imbalance zone. So you can see we can draw this new imbalance zone once we close through this imbalance. Now we have this imbalance that we had drawn. On this occasion, we just closed through this with this smaller candle. Now we don't actually make a new imbalance this time, but we've created the imbalance above. We look for the market to come back into. Now it doesn't actually pull back into that imbalance. So once again, look, we have this area created, an area of imbalance to the downside. This suggests the market's going to be bearish here. So we know the market's going to continue lower. Again, we can see the big bearish body of that candle, and you can see a new imbalance is formed in there. Price comes back into that zone, the full fill, and then we continue to drop lower. Once again, we then have this as a breakout point. Like I suggested, this is our breakout. We're breaking out here with the imbalance zone. Again, here, look, the breakout point is when we see the creation of this imbalance zone. This is what we class as the origin imbalance. This is the breakout imbalance. And this is also where we're going to see the support and resistance traders. In this case, it's an area of support broken, acting as resistance. So that I can mark this right the way across. This is where you're going to find those support resistance trades looking for trades, and they're going to get manipulated out because we can see a sweep here above the high of that candle. Now on the lower time frames here, the 4 hour, even lower, you're going to see those sweeps, manipulations to take them out of their trades. So again, that we have a breakout candle. What does that create? Again, it creates the area of imbalance that you can draw in the market. And we have the imbalance drawn again on this big bearish candle. So when you're looking for those zones to mark them out, okay, that's what you're looking for. You're looking for the large momentum candles. We have that as the breakout candle. Now, what did I say at the beginning of this video? If we create an imbalance zone away from that origin move, this has been the origin move, this is a breakout point, you don't really want to be trading off these zones because these zones are not going to be your best zones to trade from. And if we just drag that across, you can see it actually gets closed through and it's not even really respected. So this is the best zone, okay? The one which is the breakout area or the one from the origin move. Now in this case, we don't have an origin zone, so this is the breakout zone. You can see price actually comes back and we actually have a manipulation within that zone at the 50% of that imbalance. Now, in many other videos, you'll learn more about using the balances. Really want to just show you how those imbalances work. Now, we do have another breakout here, but we don't have an imbalance zone. We have that big bearish candle, but we don't create an imbalance zone. Now, later on, you'll understand about the pre-imbalance zones. You'll find out in a later video within this series. And this is actually a pre-imbalance zone. I'm not going to draw, I'm not going to show you what it is, but if you watch the rest of these videos in this playlist, you'll understand what the pre-imbalance zone is and how you can use that as well to trade. So there is an imbalance zone here you can look to trade. It did work, it did its job. Again, look, we have another continuation lower here. We have a breakout. We leave this imbalance again. So the imbalance, remember, is drawn. We're looking at that big bearish candle from the high of that candle. Once this candle here is closed, this indecision candle, that's where we can mark out the new imbalance zone. And like I said, we're looking at the low, the 50%, and the high of the zone to be used where we can see that reaction. In this case, we fill the full high. We do not close through. Okay, we hold here. There's some trades you'll be able to find lower time frames, target the lows, or some trade you'll be able to find, understanding imbalances in the market. So again, look, we follow with the trend. The trend is bearish here. We have another breakout to downside. Now before that, I believe we leave a very small imbalance here in the market on the way down. Now you're going to probably find that more on the lower time frames, but it does its job, holds price and pushes price down. Again, we can mark on this big bearish candle a new imbalance zone. And what do we see? That this is how accurate imbalances will be once you start to understand them. We pull back to the full fill, okay, of this move to the high of that zone, and we then continue on to break structure, head to downside. There is a small imbalance at the origin zone. This is our origin zone. This is the imbalance at the origin zone. Okay, remember we draw at that big bearish candle. The low of this candle, the high of this candle creates that zone. Price comes back, holds, and we continue to push lower. We then have another small break here. What does it create? Again, that becomes the breakout and the origin zone of the imbalance. Now, on this occasion, we do hold. We failed to run this low. Okay, this low here is not run. If you want to learn more on about using liquidity, there is a playlist on liquidity in the channel as well. That's going to teach you about highs and lows and how you can use liquidity to understand where the market's going. So this becomes a lower high with market structure shift head to the upside with this current candle. So this becomes a new origin. This is a potential breakout. Now we can't have a valid breakout until we have the end of the week. So at the moment, this candle would need to close like it is to form a breakout and a shift. Now on the way up, we don't have any imbalances that we can draw. So we'd have to wait for the next candle. Let's say this candle closes like it does. We have another bullish candle like this to the upside. Hopefully you can see that on your screen. That's going to create a new bullish imbalance. And then we'll be looking for potential pullback to hold at the high of the imbalance, the 50% of that imbalance, and the low of the imbalance. So that's simply how we look at drawing the imbalance, how you look at using it in trading with, I've just gone through showing you the breaker structure here. Again, more market structure you'll find in the other playlist. Perhaps you struggle to mark out those areas of imbalance. I'm going to give you an imbalance trading hack here today to make your life so much easier. And we're going to quickly go through how you can use this to your advantage as well. So on the USD daily time frame, and many of you struggle and say about how you can't actually find these zones very quickly for your areas of imbalances to be able to trade from. So what I'm going to do today, I'm going to show you an indicator that you can use on the actual trading through platform. You can search for this indicator and apply it, and I'll show you the settings I actually use as well to make this easier for you. So the actual indicator is called the FBG imbalance zones, okay, at JP. Can we just turn it on so you can see it? JP 7FX. Okay, now that is the indicator used. Now it's not going to show the candlesticks like this on the chart. You're going to see zones being applied when you add it on. So what you need to do, you need to change settings. Before we go through the settings, okay, I'll go through those at the end of the video. I want to go through how you can use this to your advantage. Now, when you look at this chart, you're going to be able to see straight away. I'm just going to be pen. Okay, so we can see that we have these blue and red candles. Now the blue candles are going to show you where the price, okay, is making that momentum move to the upside, where we're going to see these areas of imbalance left over. Now the red candles are going to show you where the area of imbalance has been left over, okay, to the downside. Now these candles will not print until you have the next candle closed after it. So let's go closer into the current price. Let's take this candlestick right here, this blue candle. Once this candle closed, okay, we then had this candle form. Now the reason for this is once we had this candle move up, and there's a way to understand this as an area of imbalance before it even occurs. Now there's a video which I'll leave at the end of this video as well. You can go and watch that and you'll understand how you can apply this. But this candlestick turns blue after this candle closed because this wick, okay, did not fill that imbalance. So what I mean is we can put this level there and you can see we've got a very small gap left over. That's why it's a blue candle. So that means basically we can then draw an area of imbalance, which we don't have to now because we understand that the imbalance is there. So you can see we have a leftover imbalance sitting there. Now the same for this red candlestick. Once the close of this candle occurs, again, we have the move down, the big bearish drop, and then we have this candle pull back and closes where it does with this lower high. Now, once we see this lower high, we can mark a level off that lower high. This leaves us that area between where there's absolutely no buying in the market, just selling. This is where we have potential orders left over. Okay, there are blocks of orders. I'm not talking about order block and all that rubbish. Blocks of orders left over in these areas where the market is either going to push back into to continue or is going to use those orders to push the market through. Now, looking at this area, you can use these candlesticks without even needing to draw a zone. This is why it's very, very easy to see your zones where they are on the chart. You can keep your charts nice and clean. You don't need to be drawing all your zones. So we can quickly identify the move up here. And when we see the market coming down, we know we've got this leftover imbalance because it's a blue candle. We can quickly look at the candle and we can see there is space in between. Now the same thing, we can look here to the left. We can also identify we had this space left over in this candle. Okay, when we see the market pulling down, we knew we had this area of imbalance. Now you could still draw your zone, but you don't need to. We'd have our zone left over here. And we can see the market comes back to the 50% area of that imbalance and then reverse back for this high. This is how easy it is for you to use, okay? Once you understand the use of these settings, I'm going to share with you today. So look, once we see the imbalance close through, I'll share with you how you can read the imbalances quickly. We see the market pushing down. Now, you could draw this out if you wish, just to see price. But look what happens here. We actually push back up, okay? And we fill the high, nearly to the high of this imbalance. And then we drop back down. Pull back again, and we continue down. Now, when we see this area, okay, this imbalance, let's just grab that again, pull that down. Again, we can see the market is holding at the top. Now, we do just close through here, but instantly we close back to downside and we break structure back down. Then we have our next imbalance here. But this time, if we mark this imbalance out, we can identify we have the breakthrough with this candlestick The next candle holds at this broken imbalance. That's because we have orders there have been consumed. The market's pushed through, okay, and they'll come back to the area where we broke through. Now we also have here what I call a pre-imbalance, where we have orders left over, and that can be held as well. And that in conjunction with this is where we see that pulling back. Now, very often we would see this act and leave an area of imbalance. Now, this occasion we didn't, because the market pulled all the way back down to hold that area. Again, here, okay, we would have had an area of imbalance, pre-imbalance, which you can learn on that video at the end of this video. But we've actually left over this small imbalance where price may want to push down to just to grab those orders and push the market up. But when we see a push down like this, very often those orders have already been filled. So this is the simple way you can use this strategy, just by adding these zones. Now you can have them, they'll be applied to any time frame you wish. Okay, we can go all the way down. Let's go to a 15-minute here. And we can identify where the imbalances sit quite easily using these areas. So you can see this area here where we have the sweep of this low. What is that sweeping into? Can you see the blue candle? Okay, you can mark off that blue candle on its own. Just mark the blue candle. You can use the candlestick. You don't have to use the bit in between. Now we've got the bit in between there. That's the imbalance fulfill on this push down. We swept that low, up the market went. That's how easy you can identify it. But I'm going to give you a little tip here today. If you mark up the whole candle from the move where we see the push up, you can see how that holds at the 50%. Again, that we can see the next blue candles created was here. Let's mark that off. And let's grab that again. Okay, so this blue candle, we push into it, we hold at the low, we didn't close through, and we push back higher. Now we create the large candlestick here. Again, we can see the market holds at the 50%, pushes out, pulls back, continues on its way. Now we're looking really now for the origin of the move. So this became the origin of that move. This candle became the origin of that move. And that's how you'll be looking at using those candles. The same here from the high. This bearish candle becomes the origin of that move. This one became the origin of that move. Now we did just push through and then drop straight back. And that's how I look at applying that type of strategy, just using those origins. The same down here, look, we can apply the origin here. The market down, we did kind of hold, then we closed through and we pushed out. And if we look at the current price, okay, we can see this was the origin move. Market pulled back in 50%, and now we've continued on the way. And then we can start looking at the next origin candle. This was an origin candle. We came back in, and then we have this one as the next origin. We pull back in, and then we have this our next move. We pull back in, pushed out again. And then we have this, the next candle. Let me zoom in. When we have a strong trend in the market, you will see these zones hold up very, very well. Now, I'm not even marking out the actual zones in between here. I'm just marking out the whole candle itself. Okay, so you can see that we've already identified the candle itself by using what? By using the indicator. I'm going to share with you at the end of this video the settings you need. I'll give you these candlesticks you need. Okay, then we can use the full candle, and you can see the market pulls back to the 50%, pushes away. Pulls back to the 50%, pushes away. Pulls back just above, okay, push away. Next candle, we pull back to 50%, we push away. Now, when I say pull back, I mean before we even see a break of structure, this can happen. Okay, so we can see this one move sideways, pushes away. This one pulls back. This one pushes out. Okay, moves sideways, pushes away, moves sideways. We push up. Again, this moves sideways before we push away. So look, you can see we have this one now formed. It's not the best location, but we can draw it. I like to see these actually form with a swing low. Okay, this hasn't got a swing low. These were swing lows in the market. This formed from a swing low. We could say this forms from this swing low, this push up, but we rather see at the beginning of the move. So that's a quick strategy there for you to use the candlesticks themselves, okay, and start reading the price in the market. Now, how would you use it? When we see these pullbacks, you simply go to lower time frame. So let's say you was using this on a 4-hour time frame, you go down to 15-minute and look for the entry. If you're using this on the 15, you can go down to the 1 minute and look for your entry. If you're on a daily, you can go down to a 1 hour and look for your entry. Very, very simple technique. So that's how you can use the actual method itself. Now let's look at the settings that you've been waiting for to understand how I apply all these candles like this, to understand and quickly find those zones. What we'll do is we go into the actual settings. Okay, so you can see I've got this set to 0. I've got my 2 colors set. This is set to 0. Okay, so show the bar color. You can see if I turn this off, they disappear. So that's the bit you need to use. Okay, so I don't actually need this on at all. You just turn this off. But if I was to set this to 2, you'll see that we should have some zones. I haven't actually got them marked. So I've got them turned off on colors. So but we just leave this as 0. They're gone now. And that's it. That's all I've got. And then I've just got color boxes and then all charts. That's all you need to do. And that will give you these colors on these candles you need to do what I've just went through with you. Look how much more simplified this is going to be for you. No need to mark up all those marks. We can see, looking at this chart, quickly looking at the 4-hour time frame here, we can see where the market's pulling down. We can see the momentum moves where the red candles are appearing. Okay, momentum moves to downside. Then we shift, and look what we shift with: a blue candle. We shift through structure with blue candles. We do start to pull back here with blue candles. We move sideways, and then we have the next breakout. That confirms the bullish bias, okay, the momentum. So we know the market's going to want to come back to these candles. Now, we don't always have to come back to them, but you can see we pull back into that candle, we push away, and then we actually pull back into this candle as well. And then we slowly now looking up, we're going to push for this high. So that's how you can use this imbalance indicator. Much easier for you to find these zones. And I'm sure it's going to help you on your trading. Now, I realize that many traders out there do not understand how to find that directional bias. So I'm going to show you on the pound US dollar on the daily time frame, 23rd of 1st, 2024. We're going to go through how we look for that directional bias. Now, it's all about understanding your market structure. And there's a great video on how to map your charts with structure. But the key concept is we're going to look at some areas of structure in this video again, but with the use of imbalances as well. Understanding the imbalance in the market is going to show you where those hidden orders remain. There's hidden blocks of orders which need to be filled or run through as liquidity. So if we look at the last move here to the downside, this move here, this shows me a break of structure. So as a swing structure, we've broken out to the downside and we're looking for that pullback. So understanding a larger swing, we're looking for a pullback for potential sell back lower. And we just mark off this as a strong swing high, and this would be our weak swing low. So potentially we're looking for reversals now to target this low. Now, the way we do this, we understand the use of supply and demand. We're looking for that last buy to sell mode, which is this big buy up here to the downside. So for me, anything that comes within this zone, as a larger zone, is where we can look for those reversals. Now, we can refine those zones as well, but understanding the last buy to sell move is important. So when we see the market down here, as we see the reversal comes as we see this minor break here to the upside of this internal structure. Now, at the same time, how can we know that the directional bias is changing? If I zoom in, if you've not ever gone through the use of imbalances before, then this should help you to understand how you can apply it for that directional bias. Now, the imbalance is created when we see a momentum move. So you can see this big bearish candle drop away from this pin bar. When this happens, from the low of this candle here to the high of this next candle, when it's closed, this candle, it creates this area left over. This is an area of imbalance where we see the blocks of orders remaining, where either they're going to be run, okay, or they're going to push the market back lower. Now, on this occasion, the market is run through. Once we see this candlestick closing through, this is taking and clearing out those orders and it gives us a directional bias as bullish. At that point, we know the market will want to run this swing high. When the market closes through that swing high, it changes our directional bias. Now we have a bullish bias, and we also expect that the market is going to do a swing pullback. So once we've seen this reversal, we know that the market will want to do a pullback against this swing to then head back lower to take out the weak low. And that's exactly what happened. From this point, we can see the market has made that pullback. So let's go closer again into that and see how we can read that directional bias with those imbalances. So now we know that this is the imbalance with reverse price. We also close this swing high. What we then need to do is look for our next imbalances, and we'll mark those out on the chart. So we have an imbalance level here. The next imbalance level is above. And do we have any more? So we don't have any more imbalances until up here. So that's my next imbalance level. And that looks like that's it for now. So they are the only imbalances that we currently have. So pull that across. So once we see, you can see the market, once we broke out of this swing high, we knew the swing pullback was going to occur on that time frame. We come into this area of imbalance, reject it, we fill it to the pip. So we expect the next time the price comes to that area, we will close through. This pushes the market back down. So what this imbalance has done is basically it pushed the market back to find an area here of demand. So in theory, we have this area as a demand zone, and we can refine that zone down to here, where the market pulls back in. So this is where you can potentially look for an entry, a counter trend entry, sweep below here, nice looking pin bar, and we target to take out this imbalance. So if you was using this as a directional bias, we would look to go long here to fill this imbalance and remove it. As we already filled it once, we expect it to be removed, but that will be my target, just over a 3-to-1 risk to reward. Now, once we close that imbalance, we expect the market to go to the next level. This is the next level, and we can close that at the same time. So our directional bias is still bullish at that point. Now we can look for the next area. So we do have this as our last buy to sell move. So you can see that the market pushes down here and we buy away. Now we can refine that to this area here, which again is a new sell to buy move, which broke this area. And you can see the market comes back into this area. Nice looking rejection candle out of there. A doji as such with a nice bullish move away. So at that point, that signals to me that we could look to go long once again. So from here, we would look to go long, and we can target the next imbalance, which is this one here. And see that gives us over a 3-to-1, nearly 4-to-1 risk to reward. And that's how we look at that directional bias. We keep going with the market. At this point, the market's gone up, we closed through, okay, that area. So that means we're going to go higher. So now what you can do is look for your next imbalance level. And we also need to incorporate swing highs and lows for the next area of imbalance. If we look at this market, we have a very, very small area here. Very small area of imbalance there. We have another area of imbalance here. And a very small one above, but we won't mark that one. We'll just mark these two out for now. So as we've now closed through this imbalance, we expect the market to want to go for this imbalance next. And where does the market head towards? It goes for that imbalance. So once we see this pullback, we'll understand we're looking for our areas. There's our area, which is the last sell to buy move. And we can map this out by understanding structure. And it's important that you understand your structures in the market. We do have a very small structural pullback there. And that's what causes that market to continue higher until we get to this imbalance. Now notice when we got to this imbalance this time, we did not close through. We rejected it, and the market in fact has pulled back to this low. And I do believe we just closed through by a pip or so. So at this point, potentially the market could well be coming back to an area where we could see this swing to reverse back to tag out this week low. And that's essentially how you look for those imbalance zones for that market direction. Once you understand the market structure swing you're within, this is our current daily swing. And we also need to understand this is our internal structure that reverses that high, which gives us this reversal. And now we know the market has been bullish. Now you could use this as one full swing to here and a pullback, and the market continues bullish. So once you understand the directional bias with the use of your market structure, and again, watch that video coming up, which goes through the mapping of market structure and the use of supply and demand zones, and you incorporate the use of these imbalances for market direction for the bias, it's going to help you to start finding that true daily directional bias. So again, until we actually close through this area of imbalance, we will not go to the next one, which is above. We don't have to go to fill that imbalance, but the orders here could be the orders inside this area of supply, okay, which pushed the market down, or we could just push down from here. So how do we know where the market's going to go next? Quite simply, all we need to see is the reversal. So again, here we had this push up. We just broke that high with that bullish move, and now we've pushed down. Now we'll check in a minute, see if we actually closed that low. If we did, then we're looking for continuation to downside from here. Let me just double check this for you. So we have a low of 1.26124, 26105. So that did indeed close below the low of this candlestick. So at this point, we have a bearish bias with market structure. Now, looking down here, where's our next area of imbalance? Well, the only imbalance we have left over, the first one, is this move here. Now, that could be where we can see the market want to head towards. Now, if we look at current price, once we get to this point, the market pulls down, we break, we do leave this area of imbalance. Now, that was removed through with this candlestick. So I would expect to perhaps see the market want to run this high first to take the liquidity, perhaps to fully fill this imbalance, as we didn't fully fill it, and then look for another drop. Now, of course, if we do go up there and we close through, that means we're going to go up to the next area potentially. And that's how you look for directional bias. And this is not something that anybody really teaches. You can look around on YouTube. You're not going to find somebody who shows you how to use these imbalance zones in this type of way. So if you're trying to trade the fair value gap and you keep losing, keep watching to see the correct way you should be reading these gaps in the market. Now, whether you class it as the fair value gap, I class it as an imbalance zone, you can also class it as a liquidity gap in the market. There's a correct way to trade these gaps. And if you're trying to trade them on every single gap in the market and you're losing, then this video is exactly what you need to be watching. So we're going to have a quick look over here. Yes, this will be in hindsight because I already know the price action, but I want to show you step by step how you read these gaps. So you can't trade every single gap. By this, I mean, you're going to find that these imbalance zones, these gaps left over, will leave orders and they're going to be filled and used to either push the market through when they're filled and absorbed, or you're going to find they're going to be filled to push the market away. So if we take this example right here in the market, we can see that this gap didn't work. Okay, you can see the market pulled up and straight through. Absolutely no buying pressure coming out of this gap. So how do we use these gaps successfully? You need to understand market structure. You need to understand supply and demand techniques. But let's go through how you can read these gaps, okay, these fair value gaps correctly on a chart. So let's go to this area. Right here on the chart, what do we have? We have one gap here we can mark. Then on the way down, we have absolutely nothing else except for this swing high. So right now, we do have some internal structure here as well, which I could mark off. We're going to pull back. So we can mark this off as a high. We go forward price. Okay, we've broken structure here. Now, one thing that you may not understand about gaps is that even when we create this move like this in the market, this is a potential gap. And we can very often see price want to pull back in and then continue on its way. So the gap, how is the gap actually formed? Well, we're going to use this as an example. A gap is formed when we see the candle high before this candle continues to be bullish. Now it can be a bearish candle here, as you can see this gap. And then we look for the next candle to create a higher low to leave a gap inside this bullish candle. So we move one candle. This has not happened, but look how this candle has pulled all the way back and we've held at this zone. Now, potentially we could see a continuation higher if we do not see a close through this level to start with. So we've closed through and wicked lower. Now, this could be getting orders out of this wick here in the market. Let's continue forward and you can see we've wicked and we've pushed through eventually. So now we have a break of structure here. Understanding structure in the market, we have a break of structure, pull back, potential continuation. So this wasn't a great example because there wasn't a gap formed. Let's look at this here. Again, we have this potential gap left over. And we have to recognize we're coming into this gap here. So we need to see this gap removed, okay, for continuation for this gap to work. So we move higher. So now we can see that we created this new gap. Now we want to see this closed through this gap or potential pull back into this gap. Why? Because now we have a valid break of structure here. So we had this break of structure here to the upside. So understanding your structure is key. We had a break here to the upside, pull back, and a breakout. Now, if you're not sure about anything to do with market structure, there's some awesome videos in the channel. And in fact, I will leave a video at the end of this video to teach you how to map out your chart. So we have this potential gap left over. Now, when we're using a gap, we're looking at 3 levels for a potential entry. The high of the gap, the 50% of the gap, or the low of the gap on a bullish move. Now, on a bearish move, we're looking at the high, the 50%, and the low of the gap. So as you can see here, price came back into this gap. Let me just show you. The gap originally was here of the high of this candle. We came back, we held, okay, at the low of this gap, and that pushed price down. That's how you understand the use of these gaps. Now, the market's now gone up and we've closed through the 50% of this gap. This tells me we will go for the high of the gap. Let's just go forward one candle. Now we've pulled back after coming towards the high of this gap. Okay, so we haven't quite touched the high yet. We've pulled back into this gap. Now look, we closed the 50%, wicked the low of this gap. Now, one thing I need to tell you is when we're trading these gaps in the market, if we have a close through the bottom of this gap, it's invalidated and you expect to move lower. If we only wick through and it holds, we'll expect to move higher. So from here, we've wicked through. We are going with this trend. We are now bullish of this structure. So I expect to see here a potential continuation to remove this gap and to go for this high. So there is our continuation. We've held this gap. This gap has done its job for continuation. Now there's a reason why this one has worked, because we're going with structure. This gap created the break of this structure. The same with this gap. This created the break of this structure to the downside. Now we've also removed this gap, which now indicates we will go for this swing high. And that's how you can start to read the fair value gap, the imbalance zone as I class it, or the liquidity gap in the market. All they're doing is we're finding those orders left over. So we continue forward and there we go. We wick the high. That's how easy it is. Now what this is part of a potential swing move with our internal structure within. Understanding your structure is key. So as we continue up here, have we left another gap? We have just left a very small gap here in the market. Okay, so a great gap there. Potentially we see a push away. We want to see it close through this high next. So there, we've got to close through this high. That is qualifying a continuation. Now we have another gap we can draw here. So as the market moves higher, we can draw out these gaps left over. And another continuation. So you can see how I'm drawing these gaps out. And when we're using this, we need to understand as well, where's the move coming from here? The move is coming from this low to this high. So we want to see a pullback at least to the 50% or lower when we're looking for potential trade. So this gap here to me will not work. And that's how you understand these gaps. Now we've got a lower high, so a potential pullback. So you can see we've wicked through to test this 50%. If we see a continuation here, perhaps on the lower time frames, a break of structure, then that could give us an entry to go long back for this high. But we need to see what happens on this next candle. Now we've wicked through to retest this low. Now remember, what did I say? If we mark this out, we're not even got to that 50%. So for me, I would not even be looking for a trade here. I want to see a pullback to this gap or even this gap here. Now we also have here is an area of demand. So potentially a pullback to this gap and this gap wicking through to demand is an ideal area for potential trade. It's going to be the swing pullback, and that's how we look at using these gaps. This gap is a potential reversal. If we can see it close down and a close through the 50%, we know we should remove this gap. So we wicked up, swept the high, and now we've closed through, again sweeping through the bottom of this gap. Now we should take this gap. And we just see, and we've closed through. Now look at this, we've actually wicked through this gap as well. So this gap has now been removed. It's done its job. And very often we're going to see a new gap created once we remove one. So we can see that we're going to create this new gap here, potentially. So how these gaps can work is we can see a pullback, okay, within this gap, and then a continuation lower towards the demand. That's how we can look at these gaps. So we've got a pull back towards the 50%. We've closed and removed this gap. We've now wicked through this gap into the demand zone. So this now tells me potentially we could see another move higher for this week high. We've seen our pullback to demand. And this is where we start looking for those trades on the lower time frames. Understanding these gaps in the market is key where they are located. So now we actually move this gap to here. And then we've got to close straight back up. That's a good sign that potentially the market will now go for this high. And we've actually closed for the 50% of this gap. So I'd expect to see the run through the high. And removing this gap, we have nothing else here to the left. So then we expect this high to be run. So we hold at the gap. Now we've closed through. This has now done its job. It's been removed, and it shows us the continuation for the swing high. We could see a pullback yet, okay, take out some of these lows, but we should see a continuation for the high. And there you have it. So hopefully you can start to see the key area of these gaps. Now, of course, if there's anything so far we've gone through in this video you're not sure about, just leave a comment below. I will answer every single question. But now we can see we've just closed through this high. That's a continuation. So now we have a new swing to the upside. So our structure continues to be bullish. So we have even this swing move here and a pullback continuation. That's what we're now looking at. And we have our internal structure as well. So let's see what happens. Now we have a potential new gap. So we can mark out something here like this. Now we could see the market pull back into these gaps, just like we saw on this candlestick down here. When we had this candle like this, it was a potential gap forming in the market, and we see we held at this area. So we don't have to even look at the gaps after they're formed. We can actually look at these areas before they even form. That's how someone really understands how to trade these gaps in the market. Now, if you've got to this point and you're really enjoying this content, then leave me in the comments, I know how to trade gaps. All you need to write is, I know how to trade gaps. Nobody's going to know what that is about unless they've got to this point in the video, just for a laugh. Now, when we get to this point, we want to see a pullback into this gap continuation. That's what we're looking for. Okay, there you have it. Okay, that's how you can identify these gaps before they even happen. Now we've actually fully closed through, potentially look for that continuation higher. And there's a continuation higher. So again, we then have a new potential gap here is forming. Now our swing is now obviously going to be from this low currently to this high. So again, we need to come back to the 50% area, but we don't have any gaps there. Let's continue forward. Again, look at this, pull back towards the 50% continuation of that gap. Now we've actually left an actual gap in the market. And we can draw out a new gap potentially here. So again, you look for the pullback continuation. And we didn't really get much of a pullback. We just a tiny pullback. Remember, like I said, the highs and the lows and the 50% can be used as a gap. So we have this gap in the market, and look at that move away now. Now, this is where many traders are going to start to see this big gap. Okay, I think, okay, this is where we can look for pullback continuation. But what you now learned with understanding structure in the market, would you want to be trading that? Let's have a look. Where is our current structure? If this is a pullback from here, there's our 50%, which means we're not going to even think about a trade until we come to this gap here. And even below that, we do have a very small gap left over just there. I'll draw that out anyway. So a very small gap. So to be honest, all these gaps, not even interested in. Let's just see what actually happens. So we've continued down. Okay, not quite got to the 50%. We closed the first level, which is the high. Okay, now we've wicked up, we've swept the high. That's an indication of a potential bearish move when we close this 50% level. We expect the full fill of this gap next and then potentially go lower. And there we have it. We go lower. We totally take out that gap. On the way down, just so you can see, we do have a new potential gap forming. And very often you're going to see a gap form. We do have a small gap there as well. Okay, so this gap here, I can just draw. This is the gap what removed this gap, which we had this one here. This fair value gap, liquidity gap, imbalance zone, whatever you want to refer to as. Myself, I look at it as imbalance zone. This is all being removed now. And now potentially this one will be removed on the next candle, because look at how this wick went all the way down to fill this imbalance. There we have it. So now we can see that this one has been removed. And now just remove that. And now we can see this one basically has just about pipped through as well, and that's been removed. And then we've wicked through this last gap. If this gap does not hold price here, then I'm expecting price to go to take out the low of this range. We work in ranges, okay? This is our current trading range. This is how we look at trading gaps in the market. Not all that other nonsense. I see so many people showing you trading the gap like this. It's not the way you read these gaps. They're used for directional bias, looking for those areas where those orders are going to be absorbed or they're going to continue that move. So here I expect to see a potential pullback into this gap and a lower move. That's what I'm expecting to see. Again, we do have another potential gap. Not much there. No, there's no gap actually. Let's go forward. Now we've got a continuation. And you can see we've left this potential move here. And this gap here. Okay. We did wick up. So you can see we've got a new gap here. New gap. Okay. Now we remove this one. What does that now tell you? It tells you that the market is most likely going to reverse this trend. This current trend to me is most likely going to reverse. Yes, we do have a potential area of demand here. But now all those orders left over have been completely absorbed by this move down. I am seeing a bearish move here, leaving new gaps. Okay, so I expect to look for continuation to the downside. Yes, structure is bullish, but reading these candlesticks on a lower time frame, I guarantee your structure will now be bearish. So we hold, okay, at this gap. Now it's not an actual gap left over, it's a gap in live conditions. So we could pull back up next candle, and we do. So we held at this gap and we've pushed through. So now we push through this gap. We could potentially now come up to this one here. Let's just see if we go up to that gap, moved up higher, and we've wicked into it. Okay, so look at that, nearly the 50%. That is how you read liquidity gaps. That is how you read the fair value gap. That is how you read the imbalance zone. Understanding this is key. Now look, on an internal structure here, we actually broke this low right there. So we expect a continuation down. Again, there's nothing in here. There's only one thing I expect the market to go for next, is this low, and then this low. If we close this low, we go for this low. Okay, so what do we have here that I didn't draw? We have potential gap in the market. So we've held at this gap. Okay, we do have a leftover gap above, but I wouldn't expect price to come back to that yet. Potentially, I look forward to hold at this gap. We've held, and we continue to be bearish. So you can see how this works. We have a new potential gap forming. This one was completely taken. Now, I'm showing you a different way to trade these. You wouldn't have seen this anywhere else before. Continuation down. Look, we pull back to the 50%, continue down. We have another potential forming gap. Okay, we do have a leftover gap. Now we're going towards this low. We wick through. Okay, we've wicked through and we've actually wicked up to the 50% of that gap and we held. Now we have this gap left over. Next candle, we've closed this gap, removed it. What does that now tell me? Potentially we're going to go for this gap and then we could look to run this low. If we run this low, we will take out the range low of this swing and we continue to be bearish. So looking at this, we have a current gap forming, okay, to the upside, very small one. So we can see a pull back into this and a push up for this high. So there you go, the pull back into this gap and a push higher. Now we have nothing else, so we could see another pullback continuation again into that area here, and then potentially the close of this low. So we spiked lower. I'm still expecting a pullback into this. We need to pull back to get those orders to push the market lower. Now we could sweep this high and into this gap still. I still don't see this going down yet. We could, but I want to see it take out this high. So what do I mean? We have a swing high left over here, which I'll class as potential sweep. So I'd like to see it sweep this high into this gap around the 50%, continue low, or the low or the high. As long as we wick through into this gap, gives me those orders. Okay, so there we have it. Sweep above the high, 50% of the gap. We haven't quite closed this level, but we've closed at it. So we should take that. Closed at it. And again, we've wicked through, but we're still going lower. Look, we're going to remove it. Continue higher. Okay, we could come back more to this gap. Let's see. Now we've turned back down. So we made a lower high. Still need to see this close through. Continue. Okay, so we wicked through again. Didn't quite come back to this gap. And we wicked through again. Remember, we're still bearish here. Got no reason to be bullish. Okay, now we've created the push down, closing through this level. Now we've taken out that low, we will remove this full swing and we'll put in a new bearish trend. There we go, we've closed it, okay? And we'll continue hopefully. So now we can see exactly how this works. And even here, there was a gap forming right there. We wicked through, we held. Now if we do close back above, which we have, we may go back up, take these highs. But understanding that reading those gaps, and let's just go forward. Let's see if we do go up. Okay, so we do go up and we continue back down. So what happened here was, if we just look at this, we created this potential gap. The market pulled back, we held, and then we closed back through. And we removed this small gap left over. So once we remove this gap here, on this bearish candle, we removed it, we had a bearish bias there. And then we can actually mark out this potential gap here. And what happened was, we can see the market pull back and then we continue down. And that's how you can look at trading those gaps in the market. Don't blindly go out there trying to pick up every single gap and trade it with that market direction, because very often they will reverse the market. So let's go over to this Euro USD daily time frame and let me show you how you should be using the imbalance zones in your trading. So let's start from this area and I'll show you step by step. Now you can do this, you can back test this as well. In fact, we'll actually do that on a replay ourselves. Let's go replay. Yes, I know it's going to be hindsight because I know some of the price action, but this will give you a better understanding. So let's just go forward by candle. Right, I want to see a break to the upside. So there's the first break to the upside. We already know, understanding that you have to understand market structure here. You can't just use this blindly. So we had just the close above this high. It puts us into a bullish bias. That means any pullbacks into areas here of potential demand, we expect market to run this high. So how can we look for potential trades using those imbalance zones? We're looking for the next area. We see an area formed. So as we see this candlestick form like this, let's go close in the daily. What we can actually do, we can actually look for trades here on a lower time frame. Let's just study this on the one time frame for today, and we'll study it on a one candle by candle basis. So we're looking for the next candle to come back and to hold within this zone. We want to see it hold at three different places. When we're using an imbalance zone, we either look for it to hold at the high of the zone, the 50% of the zone, or the low of the zone. Now we do not want to see it close through. We can see a wick through, but we cannot see it close through that zone. So let's go to the next candle and see what happens. Okay, so we've closed through. That's invalidated this zone, and we would not now look to use this as a potential zone. Now, the lower time frame, you was probably seeing a push up and a straight push through here. Now, we need to wait for the next candle to show us a close below the previous candle's high or low. So again, we haven't got anything, nothing. Okay, so now we've pushed up. So we have broken structure, and now what we have a new potential strong low in the market and waiting for a pullback for a potential weak high. But what we can do here, we can mark out this as our next zone. And what you're looking for is the market to pull back into the 50%, the low to hold for continuation. So again, we've pushed straight through. Okay, we've closed through. So let's invalidate this. And we look for the next one to form. So we form one to the downside. Now, what this can now help us with is we know we're bullish here, and we know we're looking for continuation now to do what? To target a weak high. So we are coming into areas here of potential demand. So we could draw an area of demand like this, potentially an area of demand. Let's put this as a daily zone. And we could look for the market here to just wick in and push out. Now, in reality, this is our last sell to buy move, so we could actually say this is a full demand zone. So anywhere here, we could see a reversal. Now, the best place is to look for this zone to hold, just for a wick to downside and a bullish candle. That would give me a buy. So we've just about closed through, and we've gone into the zone below. Okay, so we can just see we've left this zone here. A bullish candle now gives us a reason to buy, but we've already had this candlestick. Not only has it gone into our area of potential demand, we've just made a sweep of this low. And this is actually, to me, a very good time to take a buy. Let's just see what happens. Indecision candle. Let's zoom in. Hey, look what's happened here. We've held, okay? We've made a higher high, higher low, and we've held at this imbalance zone. A very good sign that potentially we could see the market want to go higher. So what I'd actually do here, I'd actually place a break above this high, and then I look to target this high. Now, obviously on a lower time frame, I'll be looking for a lower time frame entry here. That's how I'll be looking for a trade. So we've got the push up, okay? This is perfect. Now we can see we've got that directional bias again with the imbalance zone. We've created the next zone. We're looking for pullback in a continuation. So what we're doing is we're looking for entries, understanding where we're looking for entries, how we're looking for them. We're then going to use these to make sure we're going in that right direction. And we can look for adding our positions by using these zones on the lower time frame. So this isn't a good sign, not a good sign at all, because we've actually closed through that zone again. So this potentially does indicate we could want to push lower to look for another low here in the market to potentially push the market higher. Let's just see what happens. And there you go. See how easy it is to call those areas. Let's just move this. So that would have been a losing trade based on that. And we were looking for this high to get run. So we still have this as our strong low. Okay, no reason to change that. What we've got now is this wick through, and like I said, once we saw that close of that zone, we knew that the market was going to take that low. Potential new buy to the upside because we've wicked this low. So you could look for a breakout trade above that high. But let's just wait for the next zone we're looking for. Okay, so we have one here. So let's say you haven't taken this buy on the lower time frames here. You've now seen this zone. This is where you can drop down to lower time frames, and you're looking for an entry to hold off this level, and this low. So you can get a quick pullback, continuation. Okay, that's the sort of thing we'll be looking for in the lower time frames. Now you can use whatever you wish, but you can see here how the market is held at this strong low, and we have a pullback, and we just hold at that high and we run that week high. Now again, look, we do the same thing. We create a new zone and we look for the pullback to add into our positions. We have a pullback. Now we are above this swing high. When we want to be using these sort of entries, we want to be doing it down here as close as possible as you can where we're seeing that move coming from. Okay, so this could potentially be a new high to pull back, and we come all the way back to this area here of potential demand, areas of imbalances. Let's just go forward another candle. Okay, so we can actually identify, I'm actually just taking that off, put that back. We've now just held at the low of the zone. Okay, we've closed back above the 50. This could indicate another push higher. We've done the same again. We've wicked through the low. Okay, we've held at the low of the zone, but now things have changed. Okay, this looks like a swing pullback, and all we're looking for is the close of this bottom of this zone. We're actually holding at the bottom of that zone, and we just create a new potential zone. So the lower time frame here, you could say this is a potential swing pullback. Okay, and you'll be looking for this week high to be hit. And that means that this is the breakout point. This becomes your, this becomes your new strong low down here. And we just mark this out. And you could use this as an area of demand. Now, in theory, it should be the last sell to buy move. This would be your zone of demand. Anywhere here, if price comes in this zone, we can see a reversal. We're at that area right now. But if we refine that to this area, okay, that's roughly where we'll be looking for market. But we can look now here for an entry on lower time frames. Understanding this zone, we can see a pullback into the area of this zone for continuation for this high. And there you go. Okay, so we can see how the market is pulled back to the full fill of this zone. Okay, this is not what you've been taught. Everywhere else, you'll find that you're waiting to mark up these zones like this after this candle's close. You don't need to do that. If you understand the momentum coming in from this bullish candle, that's where those buys are coming in. You need to understand the body of these candles. So look at that. You could have caught this trade on lower time frame. So you really want to be going down to a 15-minute to 1-minute entry here to look for these types of trades. So now that leaves us, okay, this new zone where again we can look for pullback. But what have we now done? We've now broken out, okay, and we've created a new strong low, a new area here of demand. So we're expecting a pullback. That doesn't mean it's going to pull back straight away. So let's just see if we get a pullback. We can still look for buys here, but you need to have it in the back of your mind. You could expect a pullback. So we've got a single candle, indecision candle, and then we get a sweep of the low, and we've continued higher. So we now put in a new zone. Now we know this has actually swept these lows into this zone. So that's a valid area. We could have potentially found a sweep buy, okay, on the lower time frames. Let's go forward. Again, look at this. We hold at the imbalance. Okay, another potential area you could have taken a trade. Not saying you're holding these trades for long periods of time. You'll be looking for quick in and out profits here on the lower time frames. Now we've got a first sign of a reversal. See, we've just closed, I believe. Just bring this zone down. Okay, so our zone is actually from the high of this candle we've closed through. That shows us a potential reversal. So we don't really need this zone there now, but this does show me the potential pullback. So this is the potential area where we create a swing high and we could see a pullback. Let's just go forward and see if we break out again. So we have broken out with this candlestick here. We create a new zone. Okay, we've also just gone through this old zone as well at the same time. We've broken straight back up. So let's wait and we put in a new zone. So this shows us, okay, what this is showing us right here is that this high swing low is a small area where we create a new strong low, okay, potential weak high. What I wait for is the breakout of this high to confirm this. So we held at this new imbalanced zone. You can see we just wicked through and we continued higher. and we actually came back to test it again. But if you look closely, we did have this zone here, which held price, and we've broken out. That now gives us that breakout, which then gives us a new area of demand that we can draw. Now again, it would be from this high. This is the last sell to buy move, but we're just for this purpose, we'll mark it like this. We then mark out a new area of imbalance. And once again, this is our strong low. Sorry, this is our breakout. This is our new strong low. This is our push up, pull back continuation. Okay, this is our breakout. You'd now be looking for a pullback at any point now. As soon as you have that breakout, you can look for that swing pullback. So let's continue with the next candle, looking for it to hold. Okay, so we've currently held within that zone. Now we've broken through. Now that looks more like a full swing pullback. And the size of that candle looks like to me we're going to just not pull back. We're going to run this demand, perhaps run this low, and we could even take out all of this and full reversal. Let's just see what happens. See if we can hold at this. We've actually wicked through, so that actually removes this area of demand. Now what I didn't draw was this zone that we should have had marked out. We can see price held at that zone, and we've continued to push away from it. And we do have another one there that I didn't draw, very small one, and you can see the market has held at that zone and pushed lower. And again, we do the same here. So right now we have a bearish bias. Hey, we continue with that bearish bias. We're not concerned really that much about this previous zone here. The reason being is because we're going with current flow of price here. The only thing we were concerned of really was this area of demand. Even this old demand here, we're not concerned about this demand zone. We're just concerned that it's there where we can see a bounce from. We're not concerned to take a buy off it. Okay, let's just bring all these in. Let's bring that in properly. All right. So again, we have another zone. Let's see what happens. Great, now we reversed it. What does that signal? That signals, okay, this drop to downside, potential pullback, okay? So again, let's just get rid of these old zones. What do we have on the pullback? We do have this as our last, okay, buy to sell move. We now have, this is a potential strong high. This is our breakout level. So you'll be looking for a pullback. Let's have a look to the area of demand, because we don't have anything else up here. So we don't really need to use this zone because we broke it. Okay, we're currently just sitting stationary. We're waiting for a breakout. Here, ours is a breakout candle to the upside. So now we're looking for a pullback into that to target up. And there you go. We have a pullback into that imbalance. We hold the balance and we push up for the area of supply. Again, on the lower time frame, you could have caught a quick buy here for that day. And it's all about understanding these candlesticks, okay? Understanding the body of the candle. Let's go forward another candle. And now this looks like a strong push through. And again, that we could draw this one off, but we didn't even get, we got a very tiny little pullback there of the day. You may not even seen that happened over the perhaps Asian market. And we pushed up strong. This does look very bullish, and it looks like we're going to run this area of supply. But look, we push back down, okay? And what do? We close this zone. So we close this zone, which gives us a bearish bias out of this area of supply. But it's an inside candle at the moment. Let's just go forward. We're holding inside. I believe that this still looks bullish, even though we took out this zone. Okay, because this is an inside candle. If we were to run through the highs first and then did this, this would have been a much better looking sell signal. Okay, so we've now got bullish movement again. So again, we can now look to buy this to run this high easily. So we pull back, we've held. So can we now see a push higher? We do. And we haven't quite run the high, but we create a new zone to trade off to push higher. And we tested the 50% and we took out that high. So it's invalidated this zone, and there's a potential breakout, which then gives me a new strong low here in the market. And this will be my area of demand. Okay, now let's see if we can continue higher. and we continue higher, and there's a push away. So now we've broken out, we expect a pullback. Okay, but we've got this zone where we can continue higher here. Let's see if we continue to push through. We pull back into the zone and we've invalidated it. So now this shows us a potential pullback. Okay, we could come all the way back to zero demand. Let's see what happens. We got a new bearish bias on that candle. Now we have broken structure. We're expecting a pullback. This will be the area we'd look for. Come back to the area of demand. Look for swing lows. We don't have any swing lows on the way back here at all. So there's a big push. There you go. We were looking for that pullback. We got a little push up to the 50% of that imbalance. Great trade we could have had on that day. Okay, so we got a nice sell to the downside. Looking for the market to head towards this area. Now, we have no reason for another bullish move here, but we are still bullish because this is our week high. Okay, this will be our new week high. We want to see the market run. This is our current strong low. So we were looking for the market to come back here for a potential buy. We're currently selling now on those lower time frames. We're looking for another pullback into this zone. So there's a small pullback. Now it's held kind of in the middle. We really want to see it hold close to that first level or the 50%. Let's see if we get another pullback. We have got a smaller pullback, and that's a better looking candle. See, we've come back to test the 50% this time. So that looks more like we could see a push through the downside from here. And we can inside candle, again inside, very inside. And we may have just come back to test that 50% once again. Let's just mark this across. Okay, yeah, so we're back at the 50%. We just need to see that expansion away. Okay, so there's our expansion away. That leaves our new zone. Again, we're looking for a pullback into this zone to target down to this demand. So that's a bullish candle pulling back. Perhaps we can pull back to that 50% now. There it is. Now you can look to target this area of demand on the lower time frames where we're looking for those trades, obviously. We believe we've just gone a little bit deeper, swept those highs. May have been a loss for the day there. We're going to second chance entry on that candle, and we've gone even higher. Okay, again, holding at that 50% area of this imbalance. Now, sometimes you may find here on the lower time frame, you may have losing trade, but it all depends what's set up on the day. We've gone even higher, so now we've got a full fill, because this zone should be marked about there, a full fill of this imbalance. Okay, so we've marked out this zone. We haven't marked it from here. We've marked it from that full candle. We were able to watch what's happening. Now I expect to see a push lower from here. Okay, so we've got a push lower, and we've gone into that area of demand. So that is how I look at price. Okay, you need to understand these zones. So at the moment, we've still got a bullish bias, and potentially we're looking for a reversal go to the upside. At the moment, we haven't got another continuation candle. Nothing yet, no. And that's our first sign of a continuation candle. There we go. That's our first sign. So you look for the market to come back into there. We've got a 50% test. We are still bullish, and we're still looking for a run to the upside here. So we're looking really for this strong low to hold, for the market to go back up for this week high. Based on our swing structure here, we're still bullish, but we're reading the current direction is still bearish until we remove this zone. Okay, and eventually we have actually removed it. So now you can see that we've just closed through this zone, which invalidates, and now we wait to see if we get a new bearish candle or bullish candle to go with that marking. And that's actually the current price. So now we're just waiting for a new candle to form to show us that momentum so we can draw out the area of imbalance. Then we can go down to lower time frames to look for a trade. Now, as we're at this area, let's have a look to see what we would have seen. Let's mark it out at this area. Okay, on the chart. And let's mark off the high. The most closest potential trade we could have caught. Okay, let's see what we would have got here. Let's go down to a 15-minute chart. So this is the area we're looking at. Now, the first thing we've got to do is look for where prices come out in this zone. And what I'd be looking for is those swing highs. So we have a swing high here. Okay, so a swing high has been formed here. And this will be the 50% of that actual zone. So we have a swing high here. We could actually take the 50%, but we're looking for those areas of supply. There is my area of supply on a 15-minute. So this would be my area I expect price to want to come back to. Now we failed to come back there. We've just tagged the market there. And we come deeper. We then actually come deeper again. And you can see that we would have caught a trade here. And at that point, our low we've been targeting would have been here. So you can see this trade. And if we're taking a sell here, now whether you had caught the trade here, which you could have done, and went deeper, your target would have been here. And we've hit just over a 3.5 to risk to reward. So not a bad trade. Yes, it did come back as we saw, went higher. Okay, but we never would have been stopped out. We'd have already been out of our trade for that day. We did see this sweep above this high, which would have swept you out. But at this point, remember, we're looking at this move through the zone. We have nothing there we could really trade. This is the main area of supply. We see what pushes through this zone. We have this bearish close. This is more of an area of the indecision at the low. You want to see this high run, obviously, which we did. And even if you did take a trade here, understanding this was a run through this high, we had a sweep, we had a break of structure here, okay, and a pullback into this last buy to sell move. If this was your sell and you had taken a sell off here, not the best area, but it's still a valid sell of the 50% area. Your target would have been potentially this low. Okay, yes, you would have had a losing trade. Okay, very close to hitting your target. But once you saw the break, okay, understanding risk management here, you saw this break to downside, you would have moved to break even. So the worst this would have been is probably a break even trade, unless you took some profits off on that trade. So that is how I would look at then going down to lower time frames to capture these types of trades. And if you're actually following price correctly, what's just happened there? I don't know. Let's move back. You would see there was another push up, okay, above this zone, which is going through this swing high here. Then the market, okay, we look at price, we came back down, we broke this structure. The last buy to sell move is really here, and we never actually got a pullback to the area. Okay, we did have a pullback inside the imbalance, which would have been this zone here. Left over, we got a little push in, and then we did also have this last buy to sell move area here, where price did react off, okay, and came back in, and we saw the push for those lows, which then would have been this low here. So there was a potential trade you may have caught, understanding that this is the area broke structure, and we came back to, we did sweep those highs, okay, and then it fell to downside. Now, we never came into this area of imbalance, so personally, I wouldn't have taken that trade. I'd have rather had a push above this high into this imbalance, then look for the sell. So that's how we look at using that imbalance zone. Remember, forget what else you've seen out there. This is the most profitable way to read these imbalances. To go with that daily time frame, use a 15-minute entry chart to target those areas. Now, once you master the breaker structure imbalance trading strategy, you will then have a full working strategy that you can start applying into the markets. Now, we've already been through that directional bias with using those imbalance zones, and we've been through those bad zones that you need to be avoiding, and we've also gone through that pre-imbalance zone. But today we're going to look at that breaker structure and how we can use that with the imbalances. Let's look at where we can see price coming down, making that reversal. So let's go on to a replay mode here. Let's just make it from this low. Okay, so I want to go through the price action for reading the breaker structure, okay, with those imbalances. Now, if you want to understand a lot more on the breaker structure, the use of breaker structure or market structure in general, then you should check out this playlist, go through all those videos. They're going to help you massively to figure out that market structure in trading. We'll go through some of that briefly in today's video as well. But we can see here, look, the market has come down In fact, let's just zoom out first. Let me just show you the understanding of quickly of market structure. We can identify here that we have these swings here to the downside. This is what we class as swings in the market, which is our swing structure. We have internal structure here as well, but we also have swing structure. Today we'll look at more the internal structure with the use of the breaker structure and the imbalance zone. You need to understand that we have this swing structure. So for a true reversal, what we need to see is this high here removed. Okay, so we already know that we have a potential high here. We go close in. We could then look at the areas of imbalance left over. Okay, so we have an area of imbalance left over right here in the market. And then we also have what we class as the last buy to sell move area of supply. So let's mark it out as a zone. Okay, so I'm not going to mark these right across. In fact, we'll just leave them there for now because of that level. We know where this level is. So we have, again, the area of supply, okay, the imbalance zone of this swing high. So we have this is a swing high which broke structure to downside. This is now a potential pullback to what we class a strong high. Again, you'll learn more of this inside that playlist when we look at market structure. So let's now look at price down below. So reading those breaker structure with the imbalance zone. First off, we can see the market has been dropping here, and we can mark this across, and we just about closed it. So just about close there for market structure break. What that means, we have a swing high here that we need to see broken. Okay, so we need to see that broken for a shift in market structure. So let's just go forward and let's just go forward one candle. Okay, so we wicked up. We haven't quite closed it. Now, understanding what we went through on a previous video with that pre-imbalance zone, we know we have an imbalance zone that we can mark off here in the market. What can we see here? We can see that pull back into the zone for continuation higher. So let's go forward one candle. Okay, so we've just about held at that zone high. We haven't pulled back in. We have a valid breaker structure. That means we then have really an area of demand created here that we can mark out as a 4-hour demand zone. Now, understanding the imbalance, we'll leave this where it is, but we could also then refine this to this as our leftover zone. So that's our current zone of imbalance left over. We can pull back into that next. So we've pulled back in side here. This is where we can start to look for those potential trades. So now we need to look at price action here to the left. This last move down is where the market's going to want to pull back and go up to. We're going to be filling out these areas of imbalances. So the easiest way for me to demonstrate that quickly is that we had an imbalance level zone here. We got closed through. That identifies we will go for the next imbalance zone, which is this zone left over on this candlestick. And remember, in the previous video we went through how you could actually quickly identify those imbalanced candles using that indicator I showed you in that previous video. Now, I personally don't need to use it because I can see them very, very quickly, these zones, just by looking at the actual candlestick on the chart. You will eventually do that as well, but you can use that indicator to help fast forward. Now, if you haven't seen that video in the series, you've come into this video halfway through, I do suggest going through the full playlist because it's going to help you to really understand imbalances. So here we're looking for potential pullback continuation. So on the lower time frames, you'll be looking for that market structure shift to look for potential buys. We continue to pull down. Let's go for next candle. Wait for that to close. Now we've gone to the 50%. Okay, we went through in those previous videos. We're looking at the high, the 50%, the low of those zones. Okay, so we've held the 50%. That is going to be a sign of that rejection. We will go higher from here, and we will look for those lower time frame entries. Now, your first target on the lower time frames, understanding the market structure, would be this high here in the market. And then we'll be looking for to fill this imbalance, potentially going for this high up here. Because once we close this imbalance, we're going to go for this swing high. So we can mark out where the market's going to go ahead of time using imbalances. Okay, I'm going to quickly just mark it out on my chart. You can see where I've got price marked. Okay, so this means this swing high. So that are levels where I know price is going to want to go. Okay, so we go forward to the candle. So we can see that's going to close a bullish candle, big rejection, but we have rejected off these lows here in the market. So we are expecting from this low here continuation higher. So we go forward again. Okay, wait for that candle to close, and we've got a break of structure. So like I said, we would go for this level first. This now creates a break of structure, so it does create a potential area here of demand. Now it's an area of demand with this current trend. Okay, so we can now identify the market's gone from a bearish, broke out, pullback, continuation, looking for pullback, continuation. That's what we class as internal structure. Now that internal structure is pulling back on that swing move here. Again, like I said, market structure, playlist, go through those. It's going to help you to understand it. So with understanding those candlesticks again, what do we have on this candle? We have a potential pre-imbalance zone. We're going to mark it obviously from here. That's our current zone. We're going to look for pullback. Okay. Now I did mark the full candle last time. I should have marked it from the high of that candle as that pre-imbalance zone. That's our leftover zone. Now we do have a new leftover zone here. We'll draw. We can draw it here after the markets come back in. Okay, so we know that this is a leftover zone. At some point, the markets kind of come back to fill that zone. So we've got to keep an eye on that. Now we could see here a full rejection, okay, of this high, continuation up, breaking this structure high. We have a full market structure swing shift. At the moment, we have a potential pullback. Okay, internal structure is pulling back. So potentially we can look for pullback now into this zone, continuation for this level. Now, we know ahead of time where the market's going to go. If you're following the wrong type of strategies, not knowing where the market's going to go ahead of time, this is when you're going to have losing trades. Okay, so we'll go forward again with another candle. So we have a pullback into this zone, a very small pullback there on that candle, and we continue up for that level. So now we have a leftover zone that we draw out. Now we continue higher. Okay, so now we've gone through this level and we've closed it. That means we removed this level. We'll have to go for this swing high next. Now, obviously, we can have a pullback. We've got an area of demand here, an area of imbalance that needs to be filled yet. Let's go forward. So we've got a candle pulling back. And we did have here, okay, I just noticed that we did have this area of imbalance left over. Now, this was originally this candlestick. We have currently held at it and we've pushed back up. So that shows a reversal to go higher for this high. Now we could still push lower. Let's just go forward. Okay, so that's a big push down, removing that imbalance. We suggest we would go for this zone. So we've now filled this zone fully, and we've just tagged, okay, that area here of demand. That area of demand is at last sell to buy mode. Now again, if you want to learn more on supply and demand, there is the playlist goes through the supply and demand videos as well. So we're not really talking about supply and demand. It's all about these imbalances and direction. So from here, we can look for the lower time frame entries once again. And again, I'll do future videos using this with the lower time frames. We'll continue forward. So market continues to bounce off this area of demand. And we're now looking for continuation to go higher for this high. Now we knew ahead of time the market would go for this high. Now, obviously, understanding a potential break of structure, we're looking to take out this high next. Let's just see if we go deep in this demand. So we got bullish candle and indecision. And see how this closes. There's a bearish candle, bullish candle, and we've dropped deeper into the area of imbalance. Now remember, this imbalance hasn't yet been removed, so we can leave it on the chart until it's closed through. It's not removed. And looks like we've got a bullish response with a higher low, okay, off this move here. Now we're looking for this high to be taken. Inside candle, small indecision. Okay, waiting for the close. We've had a rejection of the low of this candle, pushed down. We could see this high go. Okay, so there we have it with a break structure. So we read the market head. Now what we've got a reversal, okay, making a higher high, higher low situation here, breaking up. Right, so we're now looking for the market to take out this swing high. Now, potentially here, once we see a swing high like this taken, we're potentially going to see a pullback. Now, as we do have this all now fill this imbalance, we have no more imbalances except for this one. That does suggest that we could come all the way back for this area of imbalance and then look for another swing. So this would then be a full swing pullback continuation back into this area we see above. Now, price will never move in one single direction. Continuation. It will always make these pullbacks. For us to get up into this area here of supply, okay, this area of supply, an area of imbalance, we've got to see those swings continuation to the upside for this to happen. Let's just follow price here. We know we're bullish, okay, but we could have a full swing pullback coming into this leftover imbalance. That's how we understand this. Okay, reading the market with these levels on the chart, these imbalance zones, supply and demand, all of this is already inside the channel for you to understand. There's a playlist, go through the homepage, through every single playlist, understand each concept separately. You can then start putting them all together. So we're going to look to run this high next. Let's see if we go for the high. There we go. We run the high, okay? Now, once we run this high, if we see a reversal candle straight away here, and we could just fill this imbalance first, then we could see a pullback. Let's go another candle. Okay, so we've filled and we actually closed through that imbalance. So we've taken out this high. We've now taken out that imbalance. That suggests the next level we've got to go for is this swing high. That is where I'm going to see the market want to run, but we could have a pullback first before this. So this area of imbalance we're going to remove because it's been used. We've got to break the structure here. So once again, we can draw this out as an area of demand. So as internal structure here, we're going bullish still. And market has area of demand. We could come back to demand and continue higher. Now on the way up here, we did have those pre-imbalance zones that we want to draw out. We had an area here in the market where the market's come back, held at the 50%, continued higher. We had a new zone here we would have marked. We can see again the market came back to the 50% and continued higher. And once again, we have a new zone here of that pre-imbalance. So what happens if we reverse through this pre-imbalance? We will continue to be bearish. But for now, we're bullish. Now we do have here a leftover area of imbalance just above that area of demand. And very often you will see this on your charts. The market's going to want to come back to fill those areas of imbalance into demand, continue higher. Let's just go forward. Okay, so we've got a small continuation candle. We failed to break the high. We pull back into the area of imbalance. Let's see if we continue higher. Okay, bearish candle. Bearish candle. We could still bounce off. Now, this has rejected this area of pre-imbalance, you can see. We need to close through to confirm the continuation down. Okay, so we've now closed through this pre-imbalance. That's been removed. We've pulled back into this imbalance, filled the full imbalance. Now, obviously, this was this leftover imbalance there. We've filled it. But as we already closed through this imbalance, I would still want to see the market continue down here. So what we can start to do, we can start to look for the lower time frame shorts from here. Now, we have this leftover zone. You see the market just pushed up into and we dropped out. And again, we'd have the same with this zone here, leftover zone. So for me, this has been filled, this imbalance. I expect it to be run to go to this area. That's where I want to see the market. But I'll be looking for those counter trend trades on a lower time frame here to pull back to this higher time frame area of demand here. Oh, sorry, for the 4-hour demand we're looking at now. So we didn't get a pullback. We got a test of that zone and a continuation down. Again, we'd have a new pre-imbalance left over here. So we're still creating these imbalance zones to the downside, which suggests we could run this area of imbalance and even remove this demand right now. We're seeing a strong push down, removing all of these imbalances. If we close this imbalance and we close through, we was probably going to take out this area of demand. So see, we've pushed back up. We've held at the high of this imbalance. Again, we've wicked through and we've closed this imbalance. That suggests a potential reversal back higher. But remember, we've still got these imbalances above. We just filled it. We need to see a rejection out if we're going to continue lower. If not, we close this imbalance. We'll then go for the next one and we'll continue on to this swing high. Now, obviously, for another break of structure, we've got to see this high removed. Now we've got a rejection. We're holding at that imbalance and we rejected out with a bearish candle. So we're looking for potential continuation. It's holding at that area and the market has continued. Again, we had a pre-imbalance there. Remember those pre-imbalances, they are so critical to understand. Look how the market came back to the full fill and then we dropped away. Using those pre-imbalance zones is going to get you into trades that you never would have seen before. Now, long term, we're bearish, but short term, we've been bullish with this internal structure pulling back to these areas. But now within the lower time frames, we're counter trend trading back to the downside. So what's next? If we go through and we've sold from up here, we're going to be targeting this area of imbalance, because the main reason is we can still see a bounce off here. We've only filled that imbalance. We haven't closed through. So if we close through this imbalance into demand, we'll take the low of the demand. That's where I expect price to want to go. Okay, so we've closed that imbalance. That's been removed. That means now I expect price to want to run this low. So the reason we're going to run this low, because we have no areas. Before, we're going to take this low here as well. That's a potential area we're going to run. But I would expect it to run this swing low. We then have this demand below. So we have no areas of imbalance there. So again, I expect it to run this low of this demand zone. I'm going to just bring this back. It's not a demand zone I'm going to take a buy off because we're removing this one. But it's an area we can watch. We have this leftover imbalance. So it's now looking more like a swing pullback. So looking more like we could see this full swing pullback towards the imbalance now for continuation of that high. Now, why are we coming back to this imbalance? It is the origin, okay? The origin of the move. We come from this low. This is our origin move to the upside. It's the first imbalance created where we see the market breaking structure. That is the important part you need to always remember. Where is that origin move? This is just internal structure at the moment. Okay, and now we're breaking back to the downside until we get to this area. Then we can see a shift back out, was probably taking this high. That's our next high in the sequence. Obviously, we're going to have some zones on the way back here to target first, but that's the original high we want to see go for. So let's just see if we continue down to run this area of demand. I'm going to bring this demand zone back to here, where we see the first reaction pushing deeper in. Now, on the way down, remember, we've created this new area of pre-imbalance. Where's the market just pulled back into that area of imbalance? So we should expect a continuation for this low. A small movement. We've got a pullback. So we potentially could get a deeper pullback here. So we've got a sweep now of this high and this high deeper into this imbalance. Now, if you're just using the imbalance zone after this candle's close, yes, we've just swept the high of that candle. We just went high into that imbalance. But if you're using the pre-imbalance zone, you know that this is still coming back into this imbalance. What's there? You don't need to wait for that candle to close. Or went through in the previous videos. Use that pre-imbalance. And now expect this low to be taken. This is going to be the first low the market will want to take. But then we're definitely going to take this low because this is our origin low for this move up. So it looks like one candle has taken this low. We've closed it and we just wicked through. So we could see a bounce off here, understanding that we have leftover imbalance seeing here in the market. This one has been filled. Okay, this one is a leftover imbalance that we can leave, and this one got filled as well. So we can remove those zones. So this is created in itself. We've created that pre-imbalance, a very small zone here. So again, look, we see a reversal of this level. We know we're going to go higher. That's the way we can read the market. So we closed, but we held at that pre-imbalance, and that we continue to be bearish. Let's see if we can break this low now. Market is just, and we've broken out that low. Okay, so this is what we're expecting. This pre-imbalance held price. We never closed it, and we continue to run this low. We may have had a very small pre-imbalance there, which held as well before that pushed down. Again, look, we've now created a new pre-imbalance to the downside. Okay, how easy is this for you to understand? So where are we going now? We're going for this area. That's the only place we can go because there's nothing in here. This demand has already been used. We're going to take out the low of the demand. Again, this, let me just check. We've got a swing pullback. Okay, we're below the 50% area, going down here, perfect area for trade. Could we run through? Yes, of course. We could continue with that trend. We could see this as a move down, pullback, continuation. But what do we need to see for that? This imbalance is going to have to be closed. Let's go forward. Let's stop it there. Okay, so we held at this imbalance again. The pre-imbalance was never taken. Now, if you didn't have that pre-imbalance, you would have just marked out that as a zone. Okay, we wicked through, we held, and we continued to drop lower. So it looks like we're going to take out this low now. Let's just go forward. We've got no zone. We can remove this now. You don't need this on the chart or this one. They've been filled. Okay, so let's go forward. So we have just wicked up. The market is just broken out there to the upside. This means we may want to run to this area of imbalance that we've got drawn. So we could potentially run up here to take out this swing high into the imbalance and then continue through, or we could pull back. I still really want to see the market pull back there. This area of demand on its own, I don't see this as a good zone to take a trade. We have nothing here that we've pushed into an area of liquidity. This is more the liquidity low into this zone of demand or this area of imbalance. I mean, this is in our sell to buy move on this 4-hour time frame. Let's see if we can actually, let's pull this area of demand across. Let's see if we can reverse back down. If we continue bullish, okay, remember we've got here again a new area of bullish imbalance. So what do we need to see for a continuation higher is to hold at the open, the 50% low of this zone. If we close through that zone on the next candle, that means we're going to go down to take out these lows into this area of imbalance. Simple as that. Okay, wait for the close. Right, we've closed through. That's been removed. We now know we're going to continue lower. That candle has shown us the direction. So yes, we could have looked for some trades up here, but it's better to now look for a pullback in here somewhere to continue for that low. So we got a small pullback and we got another pullback. So in here, we can be looking for those areas. Now, what could we do now? We could actually now look to take out this high, sweep it and drop. Let's see. Looks like we're going to continue to move lower. So now we've built up some liquidity here as well to be swept. And if you look at what's just happened at the lows, we've just swept that low here. So that means we have to go up higher for an area of imbalance or a swing high. Why? Because that's where the liquidity will sit. Because the orders are sitting above those highs and inside the areas of imbalance. The imbalance will have leftover orders. That's what we're looking at here. Let's see what happens in the next candle. Let's just go forward. I want to teach you this step by step. Okay, so we're looking for this high here to get swept before we go for the lows. And there we have a sweep of the high. At the same time, we've come into that area of imbalance. Okay, we could go deeper yet into the area of demand as well. Now, potentially this is looking at as a swing pullback. For a reversal, what we've got to see now is a reversal of this high unless we close through here, which we did. So we could potentially say this is now our lower high. That would be our market structure shift. So let's see what happens on this next candle. And we've closed through. So this is a close through. What that now creates for me is a new area of demand that we could draw here. Now we could draw the demand zone when we've drawn it from the body, okay, the open or from the high of the zone. I'm going to draw it from the body because we're right close to that high of the zone. And potentially here, what we're looking for then would be a pullback, okay, and then continue up for the area of imbalance. So what I'm going to do now, I'm going to actually remove this imbalance. I'm going to put a simple line like we have above. And we just pop another line over here. I think that one's been filled. So it's just this one up here. So we've got two areas we're going to expect the market one to go. If we continue to break higher, we broke structure. So now expect a pullback and continuation. Now we're going to pull back into demand here. Why? Because we have no imbalance. The only thing we do have here is this pre-imbalance zone on this candlestick. Very, very small. I expect it to push through back into that demand. That means we could go lower still. Let's just see where the next candle goes. Okay, so we're held bullish. And we've not quite pushed through that high. And we're now pushing through the low. So we've now removed that pre-imbalance. So we're expecting to see, okay, this is not actually a break of structure now. This is going to be our break of structure. Because the reason why is because this is not a swing high. Okay, this is our swing high. It's been broken now. This was the originally going to be swing high. If we had a lower high, that didn't happen. I should have really gone through that and explained it. But this is our swing high for the breakout. So now we can see a potential pullback It is looking like we're going to have closed through this area of imbalance, not quite. So if we wick through and pull back up, that's going to look better for an entry. So we've actually done that. That is perfect. That's what I'll be looking for the entry. That candlestick on its own, I would actually look to buy from. It's showing me the reaction out, and I know the market's going to want to go here first. After that, we know it's going to go up to here. After that, we're going to take out the high. So let's just follow price. Let's go candle here. So we've pushed back down, not quite stopped me out because I had a bit of room on that stop. And we're held. We can still sweep that low again. And we don't have any pre-imbalance there. So we're still expecting this high now to be run. This becomes our new structure break to the upside. We could be stopped out here. It's holding. And now it's gone higher back to price, and we've broken structure. So that's worked out. We just held into that trade. Didn't quite get stopped out. Always important to give trades room if you're taking a trade. So now expecting price to go what? Well, we've broken structure. We're definitely going to go to fill this imbalance. Now we do have now here a leftover area of demand that we can draw here. It's a new area of demand. We also have that we have this pre-imbalance zone here, which price held at the top of the zone. And then we can also draw out this new pre-imbalance zone here. I'm going to just remove this. We don't need this on here. You can see how the trade would have worked. Let me just remove that. I'm going to have to put on that demand zone once again. I just removed it accidentally. That's why it's important, okay? Always make sure you've got some room on your stops. We only just swept that low. And if you had a really tight stop there, you would have been stopped out. So we can see we're stacking on demand zones here, continue higher. Does mean that I believe we will go for this high. Let's read what's happening. First, we've got to go for this level and close through. But we're going to pull back perhaps into this area of pre-imbalance. We've created leftover imbalance there now anyway. We've pulled back into that imbalance and we've just closed that level. That now means we will go up for this level next. We could pull back first because we still potentially could pull back to fill this imbalance into this area of imbalance in demand. Let's just see. So we got a reversal candle. We're pulling back. We've just tested the 50% of that pre-imbalance zone, and this would be the leftover imbalance, nearly the 50% as well. Let's see if we continue to bullish. So if we continue up there, there's going to be a break of structure. Okay, so we've actually pushed back lower. Let's see where we go to. So we remove this old imbalance left over here. That means we'll go for the next imbalance, which is this imbalance here. That's our leftover. We've just about filled that imbalance. We're pulled into the demand zone. So what I'm seeing here, okay, we're seeing the market pushing down, pushing lower, break of structure. This is what we class as a market structure shift. This is our internal structure, okay? We've pushed down from this high. Let me just get this again. We've pushed down from this high, pull back. We've not really created a structure shift there. There might have been a very small one just there. And then you can see the markets pull back, broke out. And this is where we can go with the structure. And again, all of that, like I said, is inside that market structure playlist within the channel. So right now we've filled this imbalance to the 50% area. We could go deeper. If we close through this imbalance, suggest we'll take out and remove this area of demand. Let's just see what happens. Okay, very close at closing through. We'll hold at it, and we've held still at that area of imbalance. It's very, very important to make sure it's in the right place. Look, we're holding there. This indicates another buy. I would look to buy off here. We swept the lows, closed bullish. This is an indication we will go higher. That means we're going to have to first go to within this swing. Okay, we have an area of imbalance left over, another area of imbalance here left over, and a final imbalance here left over. So we've got to run through these zones now before we can see it. Remember, this was a pre-imbalance zone. Market held at it and pushed lower. So we want to see a bullish move higher. Okay, so there's a strong bullish move here. Okay, so we've wicked through, held at this imbalance. At the moment, there is no sign that we could continue higher until we close this imbalance. We just left a small pre-imbalance there as well. If we hold and push higher, that's good. Okay, so we held, we pushed higher, wicked through that imbalance. There's a full fill already of these imbalances. We want to see it close through. Okay, that's what we're looking for. If we don't get that close through, this could push prices back down lower. So let's continue to see what happens. We're pushing lower here. Now, if we close through this imbalance here, that means we continue to remove the demand. Is this a close through? Closed at it, and we've closed through. Oh, no, we haven't. We've actually just closed at it. So we had to wait for that candle to close. So now we've just, okay, look what's just happened here. We've just wicked the low. So what we've actually got, we've removed the demand. And this is something else that you'll learn in the channel. We're understanding the sweeps in the market, liquidity sweeps. Okay, so we have a sweep here in the market. This is a 4-hour sweep. So we've swept this. This is a very, very good indication for me that this is going to be a bullish move. Where am I going to expect the market to go? Well, at least first target would be to fill this imbalance. The reason being, these have already been filled. They haven't been closed through, but they've been filled. So that would be my first potential target. Then I expect the market to go here at least after that. Let's just go forward price. Okay, so the very next candle, where did it go straight to fill that imbalance? We knew it'd go through and close through these areas because they already had been filled. And they did close through. We should see a continuation higher. Let's just pause it in a moment. Let me just go through. We're going to have a new break of structure here. We've only swept that area at the moment. We need to see it close through. See if we can get that closed through. And we've closed through right there. So now we've closed through again. That creates a new area of demand that we can draw here. That's our 4-hour area of demand. And we're also going to have, which we didn't really get a chance to draw there, so I forgot, was the pre-imbalance. We came back, we held at the 50%, and we continue to go. Okay, and now we've left over that area of imbalance. So I'm going to remove this again because we don't need it, but we expect price to go for this level. Why? Because we've broken through that structure. We could pull back to this imbalance, more likely to continue higher for that next level we've got marked. And remember, long term, we're still expecting price to go for this level here. That's where we want to see that market go to. So look, this is how you're reading and understanding the imbalances with the breaker structure. I've gone through much more in this video than I needed to, but you can start to really get the grasp of what's happening. Let's just see if we can get to these levels, and then you'll understand exactly why ahead of time we could understand where the market is going to go. Let's just fast forward this a bit. Let's just actually go. Okay, so we went straight up, okay, straight away to this level where I have it marked. Now, I'm marking these ahead of time before we even see price get to them. That is the skill of reading not just imbalances in the market structure, supply and demand, liquidity. We've closed that level. That means we will go to take out this high next and go for the next level. So on the way up, okay, as I let it go quite quickly here, we did have this pre-imbalance zone, which is now been left over as an area of imbalance. We also had another breaker structure here. Okay, this is our last sell to buy move. This is a new area of demand. So we can not always going to come back to these demand zones. Okay, we didn't come back into this demand zone quite. We nearly came back to demand. We held at the imbalance. So let's see if the market now pulls back into the area. Okay, so we didn't need to. We just held and we pushed through. Okay, so we removed that and went for what? The next level here, where we said all the way back from here, we knew the market potentially would take that high. So now what we can identify here is that the market has made this swing pattern, like I suggested. And now we're either going to hold this area and fall back down, or we can break through. So what's the important thing? This area left over imbalance. If we continue to push up and close through, we'll remove that high. Let's just go forward. Okay, we're having a pull back here. Why are we pulling back? We're going to break a structure that we can mark right here again. Okay, that did leave. This is an area of demand as well. Didn't draw that out. Okay, so we have an area of imbalance. Now we also have, we go closer in, just reading that price quickly. Okay, we had the pre-imbalance area here. We pulled back in, held, continued higher. We then had the same thing here. Okay, but we closed through. That indicated a pullback. Okay, we would go backwards to the next area of imbalance. Currently, we're holding at that imbalance. If we close through, we continue for the next one. Simple as that. So let's see, we're not quite closed. We're holding. Now it looks like we've closed through. So now we've closed through that imbalance, and this one, we're inside this imbalance. Now we could go a full fill into the demand below here. Just see, let's go forward. And again, that we have imbalances on the way down again, pre-imbalances. Look how the market holds those areas. Let's fast forward this a bit. So the market has now a full fill of this imbalance. What happens if we close through? Then potentially we're going to go down to take out what? This swing low, which is this low here in the market. Now we could take out that low, drop into the demand here, and then continue higher, but we've also got a leftover imbalance sitting here. The market may want to go down to take out that swing low. Why? Because this is potentially an origin move. Okay, so like we saw over here, this was an origin move that broke to the upside from here. This becomes an origin move down here because we broke this structure high. So the actual origin move is here, but our nearest imbalance is here. So potentially we may want to push down, sweep this low into this imbalance, this in demand for another move higher. That's our swinging pattern. Now, how do we know this is going to reverse? Because we look for what we class as our internal structure to shift, and we can use multiple time frames for that. Again, there's a multiple time frames video within that market structure videos. So let's just go through it quickly and see what happens here. Let's just play it now, see what happens. So again, we can identify that the market closed through that imbalance on that candlestick that indicated we would take out this low. The market failed to run the low, but we knew it would take it. We've then pushed higher. We've swept this high. So we've gone through, made a 4-hour sweep. Okay, we're in a bearish bias at the moment. We continue to break structure lower. We broke structure lower, broke structure lower. We already broke this structure here. So let me just quickly show you this. Okay, so we broke structure, we broke lower, we broke lower. That we're creating a bearish trend. We just swept that high and we broke structure lower again. So we're still bearish on this market. So we removed this area of demand. We close through this level. That suggests we will sweep this low here into the imbalance. That's what we want to see holding. We want to see this area of demand here holding and push through into it. Now again, look, what do we have here? A pre-imbalance zone. Price held at it. Yeah, we did big push through to sweep that high, but we held. And we then had this pre-imbalance and the current pre-imbalance. Let's just go forward quickly. Okay, so we've actually pushed through this imbalance. Held at this one of the 50%, pushed through this imbalance. What does that indicate? We're most likely to run the low of this zone. So this zone is not likely to hold. The imbalance was closed through. This one's removed. Okay, we're coming back to what now? We're coming back to the origin move. So potentially we could sweep this low deeper into this demand zone to continue higher. Let's have a look. And again, market structure here has been bearish. So we've held at this candlestick. Very interesting that was. So we actually held here. And how did we recognize the reversal? We had a pre-imbalance zone here, okay, which held. We then left over this imbalance. This candlestick identified the reversal. We also broke this structure. Why? Because there's a structure break here to downside. This small structure break is our internal structure. We've shifted bullish. We have a pre-imbalance zone here, which held price. Okay, this is how you'll do this over and over on your charts. We have this area of demand left over. Okay, now we're looking for what? The market to run this. So look, understanding that this was the area we expect price to pull back into, we could have got a short from here down. Okay, understanding the levels you are targeting. Now, I'm not talking long term. On the lower time frames, you will find good risk to reward trades. But now we expect this area to be run because we're creating a higher swing low. And we could even look, draw out this as a trend line. And we can see that the trend line is being respected. And we expect to see these wicks and manipulations through those areas. But understanding imbalances, which this video should really be about, we are now bullish. we understand that these pre-imbalances are holding, and we're removing these imbalances left over. So these are all being removed. So where does price want to go now? We know it's going to run this high next. Okay, after that, we look for a level. That's where the price will go before we take out that high and continue higher. So that's where you're going to look for the market. Okay, so we take out that high expected. Okay, now we've broken this structure. We did make this pullback on one candle, but then we've broken this structure again with this smaller structure break, as well as taking this high. So that then creates basically on the way up. What is this? Pre-imbalance zone. Price held at the 50%, continued higher. We also have a area here, which is more of a rally-based rally area of demand. Let's just play this forward. Okay, so we held at the imbalance zone once again. And we also had this pre-imbalance zone where price held, or did it just close? Just check that. No, we did close that zone. So that's why we had to go lower into this zone here again for some more orders. Now the market's broken structure again, and at the same time closed through this imbalance, which suggested we would take out this high. Now we've just wicked into the high. At the same time, what do we leave? A new pre-imbalance zone. Are you seeing the way the cycle works? We also leave this area of demand. So we look for pullbacks into these areas. So it's quite a deep pullback. We've closed through. No, we still quite just closed at. Okay, now we have closed through, removed it. So because we removed that, we knew we'd have to go for the next area of imbalance, which is below, and we knew we'd run the demand. We'd run this low. This low actually got broken through. That was a shift in structure, okay, from this swing high. But then we've just dropped into this demand here. At this point, I would be looking for sells. Yes, for sure. Potentially see the market go lower off this pre-imbalance, but this candle puts us back on a bullish bias. And look at that strong momentum push higher. So now we've broken out of this structure. Again, we've left a new pre-imbalance to look for buy from, and we've left a new area of potential demand. Okay, remember, this is not really about the demand zones and everything. It's more about those imbalances, but I just want to show you at the same time. Now we're expecting the full fill of this imbalance. Look, we need to see a close of that imbalance to know this high is going to be rung, and we're going to continue to be bullish. Very bullish on this market. So let's look for the next candle. We close it, we closed it. So now we're going to run this high. From all the way back here, when we're looking at price action, we knew and determined that this was a potential sell area. Coming out, we did sell down, but then we continued to be bullish from this move here. So now we should see that high get run. Let's just see, and we get run. And of course, if you want to learn more on the NFXT Pro community, there'll be a link popping up in a moment. And also make sure you go and watch the next video, which goes through to more imbalance trading.